At the end of this video, you will understand everything you need to know about income tax installments, including why you're being asked to pay them, and most importantly, how much you need to pay to avoid interest and penalties. You might not need to pay what's been asked of you. I'm Aaron Hector, a financial planner based in Calgary, Alberta, and my goal is to solve the complexities of wealth by coordinating all aspects of personal finance for my clients. I wanted to create this video today to go deep into the topic that commonly comes up with many questions: tax installments. It seems like every quarter I have people asking me whether they should pay the tax installment amounts that the CRA has requested, or if adjustments are necessary because their current year is shaping up to be quite different than the previous ones. To help answer these questions, I developed a tax installment interest and penalties calculator in Excel. That decision then led me to make this video to explain how the spreadsheet works and to share it publicly. In this video, I'll walk you through the calculator, demonstrate how to use it, and provide some practical tips for planning your tax installment payments. I'll also highlight potential risks to watch out for and discuss some strategies to optimize your payments. But before jumping into the spreadsheet, I want to provide a general overview of how tax installments work, when and why the CRA requires them, and how they determine the specific amounts. I'll review a sample tax return, explain the installment notices you'll receive from CRA, and show how this ties back into the spreadsheet. By the end of the video, you'll be equipped to use your own CRA letters and financial information in conjunction with the tool, enabling you to do some tax installment planning on your own. So let's get started by looking at a summary of 2 years of tax returns. Okay, so basically what we have here is a side-by-side comparison of someone's 2023 tax return and their 2022 tax return. Now, the source of the income is not really that important for the video today. What I really want to focus on is toward the bottom where we see what the actual tax liability is. So we're going to tune in to line 43500 and 43700. So 43500 is the total tax that you have to pay. 43700 is the tax that you already paid throughout the year, so the tax that was withheld at source. To determine the installments, you're going to be looking at the difference between these two numbers. So line 43500 less line 43700. And the difference is your net tax payable for the year. Now, what's basically happening with tax installments is if CRA identifies that there's a pattern of you having to pay large sums of tax on filing, and that in a sense there was not enough tax withheld at source on your income, they're going to want to be paid throughout the year. They don't want to wait until April 30th when you file your tax return to receive payment. So if you think about how your payroll works, if you're an employed individual, you earn your gross pay and your payroll company determines how much tax they need to withhold from each of your pays, so that at the end of the year you should basically be in a zero owing, zero refund environment. That's your payroll's job. So if you have other sources of income outside of employment that do not have tax deducted at source, like income coming off of a non-registered investment portfolio, like dividends or capital gains, those aren't taxed at source. So come filing your tax return, you have all this income and you haven't paid tax on it. Another example would be someone who has RIF withdrawals, and they've elected to not have withholding tax taken on their minimum required RIF payments each year. So as you can see, there's a number of different scenarios where someone is going to have net tax payable, even if they're an employed individual and their payroll company is taking care of the tax deductions only on their employment income. So the trigger rate for tax installments is $3,000, but you don't hit the tax installment radar if you only have 1 year with a $3,000 payable or higher. You need to show a history of 2 or more years out of the last 3 where you've had net tax payable of $3,000 or more. So 1 on its own, not enough. 2 out of 3, that's the point where all of a sudden you're going to have to start remitting tax installments on a go forward basis. So once you've hit that trigger, this is how the math actually works for how much CRA is going to ask you to remit for tax installments so that they can then be paid as you earn the income throughout the year. Basically, they don't want to have to wait too long to get their tax revenue from you. So if we're talking about the year 2024 because that's the year that I'm filming this video, we really need to look back 2 years to understand what amounts are going to be requested of me to pay. So if I'm looking at the March and June 2024 tax installment requests, which will come on a letter in February of 2024, I have to look back to the year 2022 to understand where those numbers are coming from. And what's going to happen is they're going to take your line 43500 for the year 2022, 28509, subtract the tax that was deducted at source of $2,082. The difference of that is 26,427, and they're going to divide that by 4, which gives you $6,607. And that is the amount that's going to be requested for you to remit in March and June of 2024 for your 2024 tax year. Then, come August, you're going to receive another letter with amounts that they're going to ask you to pay in September and December. Now, those amounts are going to not be based off of the tax return from 2 years ago. It's going to be based off the most recently filed tax return. So in this case, we're talking about 2023. So now we do the same math. So line 43500 minus line 43700. In this case, that math results in 17,416. And so the September and December amounts are really kind of going to true you up to that figure. So they're going to take into account the tax installments that you already remitted in March and June. And then they're going to use that and give you credit for that. But you're squaring up to 17,416 here. So if you take 17,416, subtract the 6,607 that you remitted in March and the 6,607 you remitted in June, that's going to leave you 4,202 remaining, and you're going to divide that number by 2 and pay half of that in September and half in December. So in this example here, that's going to result in tax installment requests of 2101 in both September and December. So really, your September and December amounts are always truing up to your most recently filed tax return, the net tax payable on that tax return, while giving you credit for the amounts that you already remitted in March and June, which were based off of 2 years ago. So if you had a higher net tax payable 2 years ago than you do in the most recent year, it might be that you don't have a request for installments in September and December because the March and June payments already were sufficient enough to cover off the tax liability that you showed in your most recently filed tax return. So if you don't get a request in September and December, it doesn't necessarily mean that you don't need to pay tax installments. It might just mean that the payments you already remitted in March and June were sufficient. It really is just a case-by-case situation here. The other interesting thing, once you start to understand where this is all coming from, is that if you're sitting here in, March or April of 2024 and you've just filed your 2023 tax return, you can already at that moment in time identify what your March and June installment payment requirements for 2025 are going to be, because it's the same logical flow. You look at the second preceding year, and 2023 is the second preceding year to the year 2025. So if you really are one of those people that want to look as far ahead and plan your cash flow out as far in advance as you possibly can, you can get ahead of this. You don't have to wait for the letters that'll come in February of 2025 to know what your tax installment requests are going to be, because as soon as you have your 2023 tax return, you can figure it out. So that is just simply going to be, so again, line 435 minus 437, which in this example gives you the 17,416. You take that and divide that by 4, and that's going to give you 4,354, and that's going to be the amounts that are requested for both March and June of 2025. So, some people have very, very significant tax installment requests. It could even be in the hundreds of thousands of dollars, depending on the situation. And so the cash flow management on this can become quite important. So looking ahead as far in advance as you can to plan out that cash flow is often desirable. So now that you understand when you're going to be on the tax installment radar and how those amounts are determined, I just want to show you an example of what the letters that you're going to receive from CRA is actually going to look like. So I'll start with the February letter, and you can see February 2024. This shows the March and June payments, and you can see that they're tying into the amounts that were calculated, $6,607 each time. When you get this letter, it's going to show you that there's actually 3 different calculation options. So there's the no calculation option, which essentially means pay the amounts on the letter. Don't think about it and just remit it. The prior year option looks at the most recently filed tax return, and again, if you get that net tax payable figure by taking 435.00 minus 437.00, and you divide that into 4 equal quarters, you can remit according to that schedule. Or you can look at the current year, and the current year is really the year that you're sitting in right now. So in this case, this is being filmed in the year 2024. I don't know exactly how the year 2024 is going to end, but I can estimate that. And I would say use caution if you're remitting under this third option here, because you don't have the benefit of hindsight, CRA does. So if you think that you're only going to have net tax payable of $10,000, but come filing it turns out that you totally screwed up and you actually owe $40,000, you're probably exposing yourself to some additional interest payments if you're remitting installments based off of that. So if you're using option 3, just do it quite carefully. Now that's the February option. Now let's just quickly hop to the letter that you'll receive in August. So again, this is lining up to the math that we walked through previously. You'll see the 2101 and the 2101 for September and December. And the other thing about this is it's actually going to show you the payments that were received earlier in the year, the dollar amounts, and the date that CRA has recorded the payment. So this is a good check and balance for you. So if you think that you remitted payments and they're not showing up here, that's something that you really need to look into. It could be that you sent it to the wrong tax account. So for example, instead of sending it into a 2024 tax installment account, perhaps you accidentally applied it to your tax payable for your most recently filed tax return. Maybe you accidentally threw it into the wrong year's tax installment account. In which case, any of those things, it's a pretty simple call to CRA at their general line explain what's happened. You can request that they move the payment from the erroneously submitted location to where it's supposed to be inside the tax installment account. If a payment is missing and you know you've sent something in, you maybe put the wrong SIN number. A simple one number digit entry could mean that you sent it to another taxpayer. I've seen it before. It can be fixed. It can be very annoying to fix, and it can take a very long time. So, in a nutshell, if the payments here are not showing up as you expected that they would, you need to look into it. You also can review your payment details online with CRA My Account. So if you haven't signed up for that, I highly recommend you do, because it lets you look at your tax records in a very accurate way. Okay, so now let's kind of get to the fun stuff, and let's look at our calculator. Okay, so I built this to be as user-friendly as possible. So I've color-coded it so that the blue areas are for input, and anything in the white or gray, you can't touch. The spreadsheet's not going to allow you to. It's locked. Now, I also have made this spreadsheet available to the public, so look in the comments or the description underneath this video, and there'll be a link to this spreadsheet that you can use for yourself. So I'll just walk you through how to use this and some planning ideas around tax installments in general. So first of all, we're going to take a guess at what our net tax payable for the current year is going to be. Now, again, we don't know because we're midway through the year. We don't know exactly how it's going to land, so we're going to have to make an estimate here. So let's just throw in $20,000. Now we have to choose a prescribed interest rate. So for this video, I'm going to use 10%. Now, I can tell you what's happened this year is that the prescribed interest rate started at 10%, and throughout the year, it has actually moved down to 9%. Maybe it will go to 8% by the end of the year. I'm not sure, but it's 10%. It was 10%, now it's 9%. There's a simplification in this spreadsheet where I'm only allowing you to put in one number here. So you do have to just kind of consider that if you were to do this the most technically correct way, you would actually need to know the prescribed interest rates for Q1 of 2024 all the way to Q2 of 2025, because we're talking about a timeline that goes from March 15th, which is the date of the first tax installment request, all the way up until April 30th, your filing deadline of the following year. Okay. So, I mean, if you're using this calculator, you got to pick a number here. You maybe use 10 or 9 or 9.5 even, but I did just want to point that out. Now the balance due date is going to be April 30th of 2025. If we're talking about the 2024 tax year, which we are. Okay, so now let's move down to the no calculation option. So the no calc option is exactly what shows up on the installment letters. So again, if we're back into our installment letters, that's this information right here that we're looking at, okay? So we're going to go 6607, 6607, 2201, 2201. Okay, now the prior year option, if you remember, is simply the most recent filed tax return. You take the net tax payable and you divide it by 4 evenly. So in this case, it's going to be 17,616 divided by 4. So 4404 every single time. Okay. And now there's nothing to input for the current year option because this is all being generated based off of our guess at the top. Okay. And now if you remember what that letter said when you received it in February, and again, I'll just bring that back up again. It said you can remit based off of any of these three options. And what you're going to do is you'll see that our calculator is calculating the interest under those three options that the letter's speaking about. And the way that installment interest works is you get charged interest according to whichever of these three options results in the lowest interest payment. So if we look at these three, the no calculation option, if you were to remit 0 payments, would generate $1,540 of interest. The prior year option would have $1,319 of interest, and the current year option would have $1,497. Now, that $1,497 is going to be dependent on whatever number we put here. So if we had $25,000 instead, it's $1,872, not $1,497. Okay. Now, the way that this spreadsheet has been designed is that in the top section up here, it's going to automatically pull whichever of these three options results in the lowest interest payment. So I'll just show you live how this works. So right now it's pulling the $1,319 and all the interest off of that option. If we think that this is going to be a lower tax year and we're really confident of that, maybe it's only $10,000 of payable. And if it was $10,000, then the current year option is going to report $749 of interest, and now that's the lowest interest, and that's what's going to pull to the top summary section. Okay. So then in the bottom section, this is where you input the actual payments that you've remitted or that you're potentially planning to remit, depending on how you want to use this spreadsheet. So let's hop back again. I know I'm hopping around a little bit, but let's look at the August letter, the August letter. And here we see that there was a payment of $6,607 on March 7th and another on June 5th. So we can remit, or we can input those specific dates into our spreadsheet. So March 7th and June 5th. Okay, so let's do that. Not March 15th, March 7th and June 5th. 6607 and 6607. Oops. Okay. Now this is an important thing I'm going to tell you. Tax installments work basically on a credit system, or a point system if you were. So as you remit payments, you earn credits, and those credits are going to offset the interest requirements or the interest payments that would have otherwise accrued if you were to have made no payments. And this is based off of the amount of your payment and the date of your payment. So the days until balance due, 419 days, that's the number of days between March 7th and April 30th when your tax payments are actually due. So the earlier that you remit a payment, the higher the credit's going to be because there's more days that have elapsed. The higher the amount of the payment, the higher the credit's going to be. Okay, these are important principles when we're trying to understand this. So if you were ticking along making payments under the no calculation option because that's the amount that shows up on the letter, you're going to see that your credit of $1,573 is actually higher than the required $13.19, which is the lowest interest payment option of these three. So another way of saying that is we've remitted more tax installment payments than we actually needed to. So let's see, do we even need to remit December at all? No, we don't. By eliminating that December 15th payment of 2201, we still have $1,491 of credit, which exceeds the $13.91. Do we even need to remit the September payment? Actually, we don't. Okay, so you can see here that once you understand how these three different payment options work and the math around how the interest and the credits are calculated, you can actually save yourself having to remit certain amounts later in the year, potentially. Okay, it's really a case-by-case situation. Now, let's assume that we were just going along and remitting under the prior year option and that everything was totally remitted on schedule. You'll see that our credits and our interest are 100% in alignment, and as a result, there's no interest that needs to be paid. That's the way it's supposed to work. Now, what I often will find is that people get really stressed out leading up to March 15th or June 15th or September 15th or December 15th because they don't want to be late. They think that if they're late on their payment, it's going to create huge issues. That's not necessarily the case. Okay, so let me show you another example. Let's say the March payment just completely slipped your mind and you woke up on March 29th and you said, oh geez, I was supposed to remit a payment on the 15th and I totally forgot. So now all of a sudden we're at March 29th. You'll notice here that now we only have 1,302 credits, which is insufficient to meet the 1319 of interest. But really, we're only talking about $17 of interest exposure here. It's not a huge deal. And it's very easy to fix to completely eliminate the interest as well. So all we would need to do is make one of these later in the year payments early. And given the fact that these payment amounts are all the same, it's just a straight 1 day for 1 day match that we need to do. So if we were 14 days late here, we could get corrected by submitting any of these 14 days early. So now let's say September 1st instead of the 15th. All of a sudden we've earned more credits on that line item than we had before. And we're at 1319 and we're lined up. Okay? Easy fix here, easy fix. You don't need to get too stressed out if you're a little bit late remitting one installment. Just get caught up and pay the next one or one of the next ones a little bit earlier and you can get back on side. Now, it's not quite as easy if you are remitting on a schedule where the payments are different because again it's days but it's also dollar size. So if we use the same example, a late payment in March and an early payment in September, but the dollar amounts are different, now we see that actually we don't even need to remit this early because again, we only need to true up to prior year option of 1319. We'd started the year remitting on the no calculation option, and even though, okay, not quite, even though we were late here, we're not that bad because the payments earlier in the year are higher. So you can start playing around with this then to say, how much do I really need to remit in September? Let's just say it's 1,000. Yeah, like That's all you'd have to do, and then you're done for the whole year. Okay, so payment date, payment amount. It's important as you're trying to figure all this out. What else? What else can I share? So basically, I guess to summarize that, if you wanted to just make one payment and be done with it for the whole year because you don't want to have to be thinking about it, you could figure out in, mid-March, if you're making your payment on March 15th and you just want to do a single payment, how much would you need to just be done? And so let's just see. 14's too much. Oops. Yeah, $12,000 would do it. And we got some buffer in there. So 11,500. Not quite. Yeah. Yeah. 11,750 is pretty much bang on here. So even though the prior year option indicated you'd have to pay 17,616 quarterly, if we understand how the interest credit system works, if you wanted to pay early in the year one time, you won't have to pay as much. So 11,750 only. Okay. The same math applies if you're late though. So if you totally forgot about your installment payments until December, geez, you're gonna have to pay quite a lot to get caught up on the interest calculations. So now you won't have to remit 17,616. It'll be more than that. So I'm just gonna start playing around with some numbers here and see where it all lands. So yeah, 25 is not even enough. 35,000. Yeah, that's pretty close. So let's try 35.5. Yeah. Okay. So like at this point, you're basically having to remit 2 times what you would have if you had paid according to schedule, but you can still get caught up. That's the important thing to understand. If you want to avoid having to pay 10% interest or 9% or 8% or whatever the prescribed interest rate is at the time that you're thinking about this, paying late is going to mean that you're going to have to pay more to get caught up to offset the interest charges, but it can still be done. Okay, so the other thing I just want to talk about is penalties. Okay, so at the top right corner here, you'll see the interest, which is the amount that is payable by you. But then there's also penalties. So penalties are going to apply when the interest exceeds $1,000. So you'll notice here, if I say this is 10,000, all of a sudden, current year option now becomes the lowest of the three. Therefore, that's the one that CRA is going to charge you for. The interest is $749, lower than $1,000, and therefore no penalties. But if come filing, you actually have 20,000, say, all of a sudden we're back to this prior option, 1319, and we're kicking up some penalties. Okay. So the penalty calculation, it's fairly complex. I will leave it outside of the scope of this video. I can just assure you it's happening in the background on the spreadsheet. It's all available online on the government website if you wanted to dig into how that's calculated. Also, if the interest payment amount ends up being like $15, CRA is not going to charge you for it. I believe that they have a minimum threshold of $20. So if the interest is lower than that, they say, you know what, technically we probably should be charging you this, but because it's insignificant, don't bother. So if you're running your numbers here and you're ending up with only an interest charge of like $10 or something, like you're fine. But remember, this calculator is only allowing you to input a prescribed interest rate as a single number, and the technically most accurate way to do it is to layer in the layer in the prescribed interest rates for each individual quarter as you go. So if the prescribed interest rate is changing throughout the year and you're using this calculator, just be mindful of that minor consideration, okay? Yeah, so that's basically what I wanted to talk to you about today. Review, first of all, when do tax installments apply? Look at your tax return, you can figure it out. If you haven't yet received your letters from CRA, that's how you can get ahead of your planning, is by understanding where the installment amounts are being pulled from. And then use the calculator to figure out your own unique situation and how much you have to pay. Depending on the situation, if you have large tax installments early in the year, it's quite common that you maybe don't need to remit those September and December amounts fully. So this is where you can actually keep some money in your pocket. Anyways, I hope this was helpful. Please let me know if you have any questions in the comments. Check out the calculator online and smash that subscribe. I'm going to be doing more of these videos in the future. Thank you for listening.